With mortgage rates rising and prices still high, many home buyers and sellers are waiting to pull the trigger. Though some markets are seeing growth in demand, as we can see here, like Sarasota, Florida, which ranks 4th in the Wall Street Journal Emerging Markets Index for the fall. Well, Brandi, Furlan, CEO and lead listing specialist of the Furlan Group, joins us now. Thank you for joining us. So what are you seeing on the ground in terms of how things have changed now as we're seeing some of these mortgage rates continuing to creep up?
Hi, thank you for having me. Appreciate this. We are actually seeing more listings and more inventory grow since COVID stopped. It started to slow down roughly around April or May. We started to see the slowdown. So anyone that put their home on the market after May has seen a tremendous downslide. Well, I shouldn't say tremendous. It really ranges depending on the area, different percentages in different areas. We are seeing homes come on the market more than ever, where before sellers were afraid to put their home on the market as they didn't know, where they would buy or if they would be able to negotiate. I'm sort of surprised because a lot of the sellers that I've listed did refinance their house to the low 3 and 4%, and yet they're willing and able to and ready to move and pay a higher interest rate. So mostly it's because they have a need to move. It's not a want.
Interesting. You don't see that often. What was the impact of Hurricane Ian there on the Sarasota market?
For a few days, of course, we had the hurricane. Sarasota was spared once again, and thankfully. However, south of us, Fort Myers, not so good. Inglewood as well. Several areas didn't get touched at all in Inglewood or Northport. And yet one street over, they had a lot of damage. So it just depends on who they are or what their need is, again, because I spoke to several sellers over the past week that said they were waiting on estimators to come back and give estimates, but that they did want to sell and to call them back in about a month.
So what is that doing in terms of inventory and some of the movement and the trends that you're seeing now?
Well, inventory is sitting. We're seeing an average of about 66 days in Sarasota County, and in some parts of the city and in Bradenton, we're seeing roughly 45 days to 75 days.
Wow, a lot longer than I might have expected. One of the biggest questions there impacting your real estate has been the homeowner's insurance. Some feel this is the year it absolutely collapses. What's been the impact there, and what are the fears ahead?
We are finding insurance where as long as it's 10 years or newer, there's plenty of carriers out there willing to take care of that. We do have roofers that are willing to replace a roof while a house is on the market and under contract, and will wait to get paid when it closes. So we're able to satisfy that. A couple times just recently, we had a buyer and a seller negotiate to split the cost of the roof and have it done before it closes so that the lender will give them financing and insurance.
And Brandi, we know that some of these buyers are having to be pickier now. Before it was sort of all cash offers, waiving all sorts of things. Now they can afford to be a little bit more cautious, though. But what are you seeing in terms of the influx that you're seeing with this pickiness? What comes with that? What are sellers having to do right now?
Well, I call it, so I've been selling real estate since 95, and even then, before the boom and after the boom back then, and now we're back to, it's a price war and a beauty competition, where the last 2 years, it did not matter what your home looked like. So now sellers are needing to follow our checklist and get the house prepared.
And where is the action there? Is it at the higher end or the lower end of the market, and why do you think?
The higher end market, anything over 300,000 is sitting a little bit longer. Sellers are coming down on their price. A lot of the reason is because the sellers are still not aware or willing to accept the new market that we're in. And the investors are, as far as the lower price homes, 300 or under, we're still seeing multiple offers, and those are moving much faster. Anything over 300,000, they're sitting. And I think it has something to do with the interest rates, how they're not doing so well either. So that's affecting a lot of the cash buyers and those that were willing to, pay cash rather than get a loan. Well, let me back up. So when the rates were the 3 and 4%, we had far more cash buyers than we do now. And now that the rates are higher, we have less cash buyers. So we are talking about this, like, where did the cash buyers go? Why are they not jumping on this now and paying cash? It's really interesting.
And Brandi, just quickly, we know that the Fed isn't going to slow in terms of raising interest rates, at least for now. What does that mean for your business and for, you think, the housing market in your region, as we can expect perhaps mortgage prices to keep rising?
The interest rates have been 6 and 7, 8% for the last, on average, 7% for the last 20 years. And so I've seen it, homes sell, whether it was now 3% or 8.5%. or even 9%. So at the end of the day, people are always going to need to buy and sell real estate. There's always going to be that desire. If you're an investor, it doesn't matter what the interest rate is, as long as it can cover itself, the rent can cover itself. And, what we're telling our buyers now is that you're not marrying the mortgage, you're marrying the house. So buy the house that you love. And, as long as you can wait it out, or a lot of times we're getting sellers now to offer 2-1 buy downs, buying down the interest rate for 2 years. And then lenders are offering to refinance for free within 24 months. So we're just sharing, we have to educate the buyers a little bit better on what their options are, what kind of loan programs are out there, and educate our sellers on what their options are to offer the buyers to attract more buyers.